Nvidia just reported its earnings and it was up 3% on the day, but a bit of a muted reaction here in the after hours, down 1.5%. On today's show, guys, we're going to talk about why that is. We're going to dive into its latest earnings in granular fashion and talk about how it relates to the market, the semiconductor industries, hyperscalers, TSMC, and all of that jazz. We're going to look at the income statement, the balance sheet, the cash flow statement, and we're going to take a deep dive into margins, where the company stands financially. We're also going to look at guidance that the company gave. The conference call, CEO Jensen Huang had a lot to say specifically about DeepSeek and Blackwell, and we're going to talk about the Blackwell ramp, what it means for the stock, its financials, margins looking forward for the rest of this year. We're going to be dissecting everything in between, and then we'll also look at Nvidia technically and what we can expect for the rest of the year. Let's actually have a look at Nvidia. Now, very strong momentum here, up 65% in the last year. There was a bit of wobbling with regards to this earnings. Now, this doesn't paint the full picture. Nvidia was up 4% at one point. It was down 3% at one point. The market not sure what to think about the earnings, and the earnings was actually really good. Record quarterly revenue of $39.3 billion. It beat market's expectations. That was 12% sequential growth from Q3, 78% from a year ago. Data center revenue grew 93% from a year ago, 16% in Q4, and record full year revenue of $130 billion. Absolutely insane. That was up 114% from a year ago. Now let's actually have a look at the financials of the company. So if we go down here, so this is the Q4 summary. We'll actually look at the GAAP metrics. And you can see $39.3 billion in the fourth quarter compared to a year ago of $22 billion, up 78%. Gross margins printed 73%. And you could see that was actually a decline from last quarter of 74% and down 76% from a year ago. So we did actually see margins contract for the most part. We're going to talk about what that means with regards to the Blackwell release and where management see margins printing for the rest of the year. Now, non-GAAP actually saw margins print a little bit better, but operating expenses was up 48% year over year. We saw operating income up 77% year over year, and the net income was up 80%. Guys, absolutely insane numbers for a $3 trillion company. For the full year, GAAP metrics, $130 billion in revenue compared to last year's $60 billion. That's up 114%. We actually did see margins increase year over year from 72% to 75%. So yes, there was a bit of quarterly churn and quarterly concern, but zoom out, bigger picture, margins actually expanded for Nvidia. Operating expenses was up 45%, operating income up 147%. So unit economics improving for Nvidia, and then diluted earnings per share came in at $2.94, $2.99 on the non-GAAP. And if you take Nvidia's last closing price of $131 and you divide it by 294, you get 44.55. And based on the trailing 12 months, that is Nvidia's trailing 12-month price to earnings ratio based on this diluted earnings per share figure of $2.94. But let's actually go ahead and talk about the outlook, because this is what the street looks at. The street care less about what actually happened, more about what is to come. Now, revenue is expected for $43 billion, guys. This is for the first quarter. So we are continuing the sequential revenue growth. Now, they did say here plus or minus 2%. GAAP and non-GAAP gross margins are expected to be 70.6 and 71% respectively. Operating expenses, GAAP, non-GAAP, 5.2 and 3.6% respectively. And then the GAAP and non-GAAP tax rate, 17% plus or minus 1%, excluding any discrete items. So we actually did get a double beat and raise. The street were expecting about $42.4 billion in this revenue estimate right here. So it was a pretty good beat and raise. But when Jensen got on the conference call, we did see the stock pull back from those post-market highs. Now, data center revenue recorded $35.6 billion. It was absolutely crazy. The company introduced new products, including GeForce RTX 50, as well as the Blackwell architecture. And there was some interesting stuff with regards to Blackwell ramp and how that's going. We're going to talk about that a little later. Now, let's actually talk about the balance sheet right here. So cash and cash equivalents, look at this change from $25 billion to $43 billion in cash and cash equivalents. Absolutely insane. A stellar balance sheet sheet, you can see here that this is current assets. So all assets that Nvidia can liquidate within 1 year equates to $80 billion. And this is accounts receivable, inventories as well. Very interesting to see that accounts receivable number right there. So you could automatically pencil that in probably for the next quarter. They have $23 billion right there. That's some very interesting developments. If you ask me, I think Nvidia should be able to hit that Q1 guidance for the next quarter very, very handily. Now, total assets was $111 billion. They just have so much assets. And then you look at liabilities. I like looking at total liabilities against current assets. So you have $80 billion in current assets, total liabilities of $32 billion, and you just have a very healthy balance sheet compared to the $80 billion in current assets versus total liabilities. So this includes current liabilities as well as long-term debt, long-term operating leases, as well as long-term liabilities. You can see here $8 billion in long-term debts. And due to the cyclical nature of semiconductors, these companies love to hold a ton of cash. Let's actually look at some of their expenses here. So this was interesting with regards to the cash and debt they have. Look at the interest income, the quarter over quarter and the year over year figures. $511 million in interest income, $61 million in interest expense. So that is very, very healthy. You have all of Nvidia's debt covered by the interest income they have. That's a position you want to see the company in. $1.7 billion in interest income, $247 million in interest expense. That is, of course, on that long term as well as short-term debt that they have. In fact, they don't have any short-term debt. They've wiped all of that off the balance sheet. They just have this long-term debt outstanding right here. And that could be anywhere from 5 to 10 years, looking much longer than that. So Nvidia are in an absolute amazing position. If we dive into the cash flow statement right here, so we have the net income, $22 billion, and the net cash provided by operating activities. Now, to find out the actual free cash flow, you take this number right here and you subtract the CapEx spend, which would be purchases related to property and equipment, intangible assets. So that would be $1 billion right there. So you're looking at about $16 billion minus $1.07 billion. You're probably looking at something close to $15.5 billion in free cash flow compared to the previous quarter of $11 billion. Just a money printing machine with regards to free cash flow. That is what you get as a shareholder. Nvidia also announced a dividend of 1 cent, $0.01. And if you have a look at the free cash flow on a year-over-year basis, $64 billion. And then again, you got to minus this CapEx figure right here. You're looking at a $61 billion, or very close to that figure, $60.5 billion in free cash flow for the full year. Absolutely insane. Look at the growth in comparison year over year. Just immense growth stuff you just don't really see when it comes to a large cap stock. This is the type of numbers you see with a company very early on in its growth phase, or that mid-tier growth phase when it goes from like a small cap into a mid cap. That's the type of growth you see with these numbers right here. And Nvidia's doing it in the hundreds of billions of dollars. It's just nuts. Absolutely crazy to see. Now, let's continue. The earnings call, we're just going to go through this article here from Investopedia. Look at some of the key things. So Jensen Huang says, DeepSeek ignited global enthusiasm. It's an excellent innovation, but even more importantly, it has open sourced a world-class reasoning AI model, adding nearly every AI developer is applying R1 or chain of thought and reinforcement learning techniques. If you guys use Grok from Twitter, they have a deep research and reasoning model as well. It's very, very good. I use it often, especially for the deep research. Now, something with regards to gross margins. So the gross margins expectation, right, actually missed the street. So the street was expecting 71% for the next quarter. Management team came out and said it was going to be 70%, right? Gross margins for this quarter printed at 73%. So we continue to see gross margins decline. However, they came out and said that later this year, once Blackwell is fully ramped, they expect gross margins to be in the mid 70s. And that's once Blackwell production has fully ramped. Now, something else to note, I'm not sure if they notice it here, if they mention it here, but Blackwell actually did $11 billion worth of revenue this quarter. Very interesting. Now, there wasn't actually an official number on the street for this, but I did hear whispers anywhere from $6 to $7 billion. So this number did beat handily, and we are starting to see the Blackwell ramp, and we should see that fully ramp up in the second quarter potentially early third quarter of this year. And if we do actually get that massive revenue expansion we do get from Blackwell, along with maybe margins ticking up from the 70% range to 75, maybe 76%, you should see the back half of Nvidia. We should see a massive price appreciation, maybe the stock getting to the 150, 160 range from where it is right now, the 130 range. Now, it's very clear that the Blackwell demand is still very, very strong. Jensen said customers are anxious and impatient to get Blackwell. We're going to have to continue to scale as demand is quite high and customers are anxious and impatient to get their Blackwell systems. They're also selling the GB200 systems as well as the GB300 systems, and this is just a pair of 76 Blackwell GPUs as well as 30 or 40 Grace GPUs, and I believe the GB300 systems, which XAI is using, is 76 Blackwell systems as well as, I believe, 45 Hopper systems. So these two together, people like XAI, Meta, Amazon are using these massive systems. Jensen said hyperscaler demand remains strong. Now, the reason why gross margins actually slipped, guys, had to do with data centers, citing higher cost systems in data center segment that is by far its largest source of revenue. Gross margin 73% for the quarter, was down 76 from a year earlier, but that should improve sequentially. Now, this quarter was absolutely insane, just insane when you think about it. Everything about this quarter was just stellar, guys, from revenue, GAAP net income, EPS, everything. Looking at the outlook, looking at everything, free cash flow, cash and cash equivalents, everything was great. But what does this mean for the stock Nvidia? Now, everything is going to be dependent on Q4 guidance. Now, in terms of revenue, as you can see right here, market's expecting 42 billion. That was the estimate. That's sort of what management implied. And then looking at Q2, we continue sequential growth. And in the third and fourth quarter, you can see a 5 handle come onto Nvidia, 51.75 billion, 56.8 billion dollars, just nuts. And if we do get this figures right here, let's say $50 billion in revenue, Q3, Q4, and then margins maybe print like 74 here in Q3, maybe like 75 in the fourth quarter, you could really see Nvidia ramp up in price. Nvidia has actually kind of done nothing from about here. If you actually look at June 2024 to where we are right now, so for about 8 months, the stock has done nothing. Now, don't get me wrong, we've seen a massive pullback. And if you actually look at it on a peak to trough basis, the stock is up 69%. But in aggregate, the stock has done nothing from these highs right here to where we are today. And this is all going to be dependent on Nvidia's ramp. Now, we are still in a very clear uptrend. As you can see from Nvidia, we're in a very, very clear uptrend. It's just that we've stagnated and we're sort of forming this wedge. And what we're going to see, a continued compression with Nvidia up until we get to Q3, Q4, 2025. And then from there, depending on the earnings, we'll make our next move to the upside and downside for Nvidia. That is my expectation. Have they put up the earnings? Yes, you could see the earnings surprise, revenue by 5%, a revenue by 3.32%, earnings by 5%, a very, very solid quarter. A bit light on margins. The after hours reaction was muted. However, I think this is great earnings and this should set the stock up to go ahead and hit new all-time highs. It might not be this quarter, but I definitely think we see new highs for Nvidia, especially when we do go ahead and look at what is to come with regards to expectations for earnings. Earnings per share will sequentially grow for the next year as well as revenue. And if margins expand, do expect the stock to very easily go ahead and break the $150 range, maybe even trade a lot higher than that 160, 170, especially as earnings per share continues to ramp up and the company becomes incrementally more profitable. And then just looking at a quick fair value estimate for Nvidia, what is the return you can extract at these levels using the revenue figures? Now, I'm using $130 billion worth of revenue, what they reported, 25% growth for the next 5 years. I've seen some estimates say as high as 31. I'm using 25 of being conservative with 45% free cash flow margins. The current EV to free cash flow is 56, and I'm also seeing some multiple contraction from the 56 to 31 range. This is the industry average for semiconductors right now. So if we model that, 25% revenue growth, 45% free cash flow margin growth, 31% EV to free cash flow, that's your enterprise value. So you just take the free cash flow, multiply it by your multiple, you get the enterprise value, subtract the net debt. The company has a lot of net debt. That's positive. It means they have more cash than debt. Then you get the equity value divided by shares outstanding. Now, share outstanding is decreasing by 0.8% every single year. You should get a stock price of $237 in 2029. If you then go ahead and add the dividend yield of 0.3%, the current stock price of $131, that means you should see a 5-year projected compound average return of about 12% here for Nvidia. But guys, if you've made it up to here, thank you so much for watching. Go ahead, please subscribe to this YouTube channel. It's a new channel I put together. For those of you that are new, go ahead, check out my main channel, FinFluential Television. You guys can go ahead. I just do daily recap shows on the market. So please go ahead, follow me on this channel, follow me on my other channel, on my main channel. But if you made it up until here, guys, thank you so much. I appreciate you watching it. Go ahead, hit that notification bell, subscribe, hit the like button, and leave a comment for the algorithm. Cheers.